Welcome to the bizval podcast. At bizval, we are passionate about empowering entrepreneurs the world over to understand and unlock the value in their business. We work with advisors and entrepreneurs to demystify the value creation process when building a business. At bizval, we know how tough it is to grow and run a business, which is exactly why we've made valuations simple to understand, accurate, and affordable. Our unique blend of tech and touch ensures that you always receive the best service, authentic human engagement, and data-led insights to ensure that you build a business that provides you with freedom and choice. In the bizval podcast, we showcase stories of real entrepreneurs and advisors, sharing lessons and inspiration from their journeys to make your journey just that little bit easier. And today I'm thrilled to be joined by Mason Doick. He's the head of corporate at JP Jenkins, which is one of the UK's leading market venues for unlisted shares, and also a key operator in the PISCES framework. So Mason, welcome. We're really excited to have you today.
Thank you, Graham, for having me, and I'm very excited to discuss further.
Fantastic. So in terms of today's podcast, we're going to break it down. Mason's going to give us a little bit about his background and his influences. We're going to talk a little bit about JP Jenkins and what they do, the PISCES platform. We're going to dive a little bit into, bizval's recent quarterly report, which Mason was also kindly a contributor to that, and then some rapid fire questions as usual, just some fun questions at the end to get to know Mason a little bit more. So Mason, let's dive right in, and let's go back to the beginning. Tell us a little bit about your journey. What were some of your early influences? What led you into capital markets and all those things, and eventually JP Jenkins? So the floor is yours. You're welcome to share anything that that you're comfortable sharing with. Maybe one or two embarrassing stories along the way too.
No, thanks, Graham. So I guess there's a whole host of things. I'm not as extensive career as maybe some of the guests on the podcast, but over 10 years now in capital markets and both public and private companies, and working alongside different boards and advisors. I think what really led me into this space was an interest in how companies work, evolve, grow, the whole process from start to finish. When I first started my early career, very heavily involved in pension funds and blue chip stocks and FTSE, and these companies are great and they're fantastic, but they're inflation hedging portfolios, bond and equity portfolios in large wealth management companies. It's incredibly important part of everyone's portfolio, both your pensions and elsewhere, but it doesn't get you excited and get me out of bed every morning. So I moved across to private equity, private companies, venture capital, and seeing and helping and supporting and raising capital for early stage companies in the start of my career, and watching them with TV ads and then their product in store, or B2C, B2B consumer businesses, things like that were quite interesting, exciting to go and say to somebody, oh, this company on the shelf is what I helped, or part of it was to get to that point. So yeah, very, very interesting. I mean, there's been a lot of people that supported me and mentored me across, maybe helped me with certain things. Whether I've listened or not, I don't know. But we've had and I've got to say, we've had a really good colleague who we've been involved with for a number of years. Myself and Veronica at JP Jenkins have worked with a chap called Malcolm Byrne, and he was a city veteran across America, Australia, China, and has done a good long-standing career without naming too many years and giving away his age, but incredibly good mentor in this space, and brought me into sort of where the JP Jenkins fold is now.
Fantastic. And, you obviously went into finance and capital markets, but, in your early days before that, did you always have a desire to get involved in business? No illusions of becoming a doctor or a professional sports person or anything along that, anything like that along the way?
Well, interestingly, or maybe not say, I don't know, all of our, family, a lot of our family members have been in the military. So I did think about maybe doing a stint there. And then halfway up the Brecon Beacons, when I was in my late teens, I realised that actually being beasted, running up a mountain in the pouring rain with a t-shirt on, probably wasn't for me. So yeah, I moved across to the finance world following that. But I think there's been a couple of times where I've looked at different avenues and different roles. But yeah, it sort of just fell into it from other contacts and points of view.
Yeah, I mean, something you touched on a bit earlier is, when you're in the sort of the world of listed companies and all of that, a lot of that's about stewardship and maintaining. Okay. Whereas I guess where you're at now, it's a lot more about helping businesses grow. And it's quite a different mindset that's needed in terms of those sort of two, I guess almost two sides of the same coin in some ways. Yeah, why are you sort of more interested on the sort of growing side? And if I look back at my career, there's also a number of parallels. I started in a big corporate bank and then slowly moved towards entrepreneurship, and have a deep passion for helping business owners and that grow and build new things. So what was that sort of trigger for you? Was it a conversation at some point? Was it just maybe being a bit unfulfilled in the sort of
I think
the
I
more
think
retail space?
I think the excitement of working very closely with management. When you mentioned, Graham, about working in like a big bank, so I was in a building society or a bank after as well. Um,
Yeah.
that there's such a large machine at work, and you are one of the many
Mm,
cogs in that machine, and you're supporting a very large entity move very slowly. And that is
yeah.
great. Obviously, we need everyone to do that, or people to do that job and fulfill that role. But for me, working very closely with a founder or an entrepreneur who is completely in love and obsessed with their business, whether or not their decisions were always right, was another story. But having that engagement with senior management, seeing how the business grows, watching it over the years develop, and also as well as you've seen, loads of these companies are fantastic, especially out in the regions outside of London, maybe outside of
Yeah.
different capital cities, wherever they're jurisdictional domiciled in whichever country they're domiciled. But there's so many good businesses out there that are doing incredibly well, but don't understand maybe the whole commercial, corporate finance, capital markets world. And
Yeah.
I realized that investors were supporting these companies but couldn't get any liquidity. They couldn't get the business to where they wanted to
Mm,
get to. And then I thought back to my public markets experience and thought, well, actually, junior market listed companies also struggled with liquidity and were so focused on
yeah.
share price, but weren't actually bothered about, or were bothered, but they weren't focused on the growth of the company, which was the most important thing. So
Yeah.
it sort of led me into that route, because I just thought, well, actually, there's got to be a way. Someone once said to me, there's a million and one ways to invest in the company. It's like sitting at Clapham station or one of the big trains or Waterloo, and you're seeing all the trains coming in, and everyone's telling you how to get in, but nobody's telling you how to get
Mhm.
there's very limited exit opportunities for both private companies and public companies, and I think that
Yeah.
space is dwindling even more. So yeah, it's something that was sort of a force that pushed me this way into providing other options.
Fantastic. And before we move on to a bit about JP Jenkins and you kind of leading into that, you started working with founders directly, and I speak the same language. That what gets me out of bed every morning is to actually engage with founders and owners. Whether we're doing a valuation for a divorce or growth or whatever the case might be, engaging with the founders always there's something special about that. Um, and you touched on that, but what would you say? One of the sort of the biggest learnings you've had in terms of working with founders? Where are the biggest gaps that they experience? Is it a question of, lack of finance understanding? Is it not knowing what they don't know? Is it that they're just so, obsessed about the product, what they do? Where are some of those things that you've kind of noticed over the last few years? And how do you impact in some of those challenges that they have?
So I'd definitely say the first point would be around engaging and managing a good relationship with stakeholders. So when I
Mm,
say stakeholders, that would be, everyone. That would be non-exec directors. It could be the board. It could be shareholders or family or friends that invested from early doors. Because I always
yeah.
notice, and I appreciate that this is not the case across the board. There's lots of very good companies that report on a regular basis, but I've noticed that, in my capital raising years, lots of early stage private companies or growing private companies were focused purely on the next raise, the next project, the next
Mm,
acquisition. Um, and they would only go back to those existing shareholders who from day one took the most risk only when they needed more capital. And I think
Yeah.
when you speak to the end investor that was investing in these deals, they were saying, well, actually, we feel a bit unloved. We'd like to,
Mm,
we've taken on a lot of risk. We've taken on the risk capital from early doors. We'd like to be engaged and involved a bit more with the business. Now, it's a complete
mm,
catch-22 because you understand that, if you look at these crowdfunding platforms and you've got these bulletin boards and there's people calling out to run the business and they own one share, that's not helpful either.
yeah.
From the perspective of the company, having maybe regular updates, announcements, quarterly updates, whatever it may be, with existing stakeholders is incredibly important to manage both the
Mm,
expectations of an exit, but also the future plan of the business. I've seen it throughout my last 10, 11 years now of people saying, well, when is the exit going to be? What is the exit plan? Circumstances
mm,
change around, children, divorce, marriage, whatever it may be. How can we maintain a good relationship with all stakeholders and support them the whole way
mm,
through? I think the other element is, I guess, as you sort of touched on it a bit there, is that you've got these very successful businesses that are, doing well, but they sort of stagnate over a period of time. It plateaus the growth,
mm, mm.
and it's that sort of no man's land of what is the next step? How do we grow? And
Yeah.
it's a balance between raising significant capital and diluting the existing shareholders and the founders' share ownership, but then do you want to give away that control and lack of liquidity and opportunity? But at the same time, you need to take
Mm,
risk in that step to take maybe the move on. So there's always these sort of scales of opportunity plus benefits plus negatives and dilution. You've seen it a million times over with example companies that raise tens, if not
mm,
hundreds of millions of pounds at extremely high valuations when the market's conducive. Maybe in 2021, for example, you saw loads of companies raise
yeah.
capital an IPO, and then now we're sitting here 4 or 5 years later, and those same businesses saying, "Well, we're having another down round." And the amount of companies that have down rounds that are struggling to raise now, or struggling to raise sophisticated capital, high valuations, I think those are the things we need to manage, or I get interested in managing with them and support them, and give maybe it sounds quite brutal, but maybe a realistic opinion on what we can expect instead
Yeah, I
of
mean, it's so interesting. You touched on two key things, and it's interesting how, that was a fundamental to our business. It's about relationships and that sort of human connection. The technical stuff and the theory and the MBA stuff that exists, and it's almost assumed nowadays. And even with the advent of AI and that, so those relationships and understanding how to manage the relationships with the stakeholders and the owners is fundamental. And that second piece as well around managing those trade-offs. What choices do you have? It's not always about growth at all costs. And sometimes when a business owner is so passionate about what they do, they dive in, they go into tunnel vision, which is great, but they lose sense of that biggest perspective. So I guess that's also the role that you get to play in helping them through that, which I guess leads us into the next question, right? And that's a bit about JP Jenkins. So I'm sure some of the listeners listening in are already clients of yours or prospective clients, and they know everything that you do. But for those that are unfamiliar with JP Jenkins, can you maybe just share a little bit about who you are as a business? What do you do? Why do you exist?
Yeah, of course. So JP Jenkins is a fairly heritage brand, I imagine, and in some people's eyes, it's been around for over 30 years. The original JP Jenkins business was a market maker for one of the biggest junior markets of that time called OFX.
Mm,
And OFX market or exchange was in 91 trading a lots of the biggest private companies in the UK. So you had Weetabix, National Car Parks, Adams Brewery, lots of
yeah.
football clubs on there, big Premier League football clubs on there. And that was long before AIM was launched in 95. So incredibly important history, but something we don't dwell on too much because the real core business of JP Jenkins now and the fundamentals was actually really relaunched into a 22, 23. So the old heritage of that brand was sort of left in a box in a corporate finance house or investment bank for a long time. And me and the team came together in 22, 23, and we brought about trying to re-enlight this sort of growth market. We realized, that
Mm,
junior markets in the UK were struggling. There was lots of companies delisting or coming off markets or not seeing them as exactly what they would require at that point in time. And
Yeah.
I saw a lot of private equity portfolios growing, but there was a boiling point of liquidity where lots of people were taking money in, but none of these portfolios were getting any money out. And there was creations of continuation funds, portfolios buying each other, but there was no exit. So that's essentially where JP Jenkins was born, is that how can we create a private market that allows trading in any security, not only shares of private limited companies or unquoted PLCs. And really we thought, well, actually, if we can recycle capital that's gone into early stage ventures and done incredibly well to investors, there is a continuality of liquidity for further new ventures and new businesses and new entrepreneurs to grow. Which is not only good for the economy, but it's good for hiring, obviously, a number of new employees across several, lots of various copious amounts of sectors. And it's a really good cyclical nature for the economy in the UK. So, in essence, yeah, JP Jenkins is a best way to understand it, a private sort of stock market or private stock exchange in a way. Sort of caveat that with inverted commas. It is a regulated private market. It works with all of the regulated counterparties and retail brokers, likes of the big names in the UK. Anyone that has a UK regulated broker can trade on JP Jenkins. And certainly, if you had an involvement in a company as an angel investor, or you're on the board of a private company, you're thinking, actually, we've got some shareholders that would like to maybe take some money off the table, or they're giving you a bit of pain or a bit of a nuisance. It's a good way to help them out the business and bring in new interested investment.
Fantastic. And I think just to touch on a few points there, I mean, as you say, you kind of relaunched the business or the brand 22, 23, which was a very different world post COVID, post Brexit to, yeah, it's kind of say the earlier years. I don't know whether you go pre 2008 or post 2008, but let's say the world was incredibly different. And I think at its core, there's two things that you touch on. One is liquidity, which is critical no matter where in the business spectrum you are, and governance, but not governance for the sake of strangling businesses, but governance in a way that enables growth. And I think those are the fundamental pillars of what you support. So let's get practical here. What sort of companies should engage and work with you guys?
I think it really depends. It's always a question I get asked from the advisors, the lawyers, the banks. So, we've got hundreds of private companies, but who can you actually help? And I feel like,
Yeah.
sometimes I'm sort of dancing around the question, which I don't mean to. It's more of a sense of, because it's a market, it's so open, it's so broad, so I'd love to say to you, this is exactly the client we're looking for. But realistically, the companies can be a couple of million valuation all the way up to some of our larger ones being shy of a billion. So we'll have
Yeah.
companies that are doing, we've got one at the moment that's doing over 600, 700 million in turnover. But the
Yeah.
reality is, we have obviously lots of smaller companies as well. And, because it's a market, it is, and I can't stand this definition, but I hear it all the time in my life, is sector agnostic. We are sector agnostic. There is, every company from tech to infrastructure to retail, to property to we've got lots of pharma, bio, so it just depends on that type of business. Realistically, if a company's got had 7 rounds of funding, or over the last several years has raised funding, it's got a growing cap table, it might have some employees with shareholders, there is a need for liquidity, they want to have a printed price, a mark to market, a third party trading platform, then that's perfect for those companies to utilize JP Jenkins. It
Yeah.
also lends itself, I imagine, to, well, I know it does, to those companies that are on the way up. So, the occasional company nowadays that does want to IPO, we hope there is more of them coming through. They can certainly use JP Jenkins as a perfect stepping stone. So we've been described as a sort of incubator, nursery, foundation towards a public market listing, whether that is in the US, whether that's overseas, whether it's in the UK. It doesn't make too much difference, but it gives an opportunity for the company to have a mechanism for the next step forward. And then likewise, obviously, if there are companies that are moving markets, we see companies from Euronext and other alternative exchanges say, well, actually, we'd like to have a UK listing or a cross-border listing or a UK, and albeit that we're not an RIE, we're not a recognised investment exchange, and we're not a public exchange, you've got that technicality of having an ISIN code. You can trade electronically, settle electronically, and you're UK based, which is attractive to overseas companies and shareholders and investors.
Yeah, that's fantastic. And I think you play such an important part in the ecosystem. I think that's something that's not lost. You can't do this on your own. It's dependent on the ecosystem. You almost act as a facilitator is the wrong word, but you kind of like grease the wheels of the of the ecosystem, so to speak. And you're right. It starts right at the sort of the SMB or SME market, if you're in the US, right through to probably the upper mid market. And yeah, I think the key thing you touched on there is there's got to be a need for liquidity, and that could be for a variety of reasons, right? I mean, two shareholders have had a falling out, and one of them wants to leave. In a traditional business, how do you do that? That capability doesn't always exist. So I think it's a fundamental, part of that ecosystem and having a great impact. So I want to just talk very quickly is why is this important, particularly in the context of where public markets are right now? Certainly I'm based in South Africa, but we work in the US, we work in the UK. Yeah, it's the same, I guess, in London. Like the level of listings and that have slowed down. South Africa levels of listings have slowed down. So why is this important?
I think, as you mentioned, capital markets have always and will always play, I imagine, a very important role in every economy, and they should do. I think we're definitely not trying to replace that or amend that or change that. We do not see ourselves as a competitor at all because traditional IPO is very, very different. Companies that want to raise significant amounts of capital, they want to grow and expand and scale. I will say to them, certainly you need to look at listing on a public exchange.
Yeah.
The JP Jenkins mechanism is very different. It is, as I say, a mechanism for trading. It's enabling a way of shareholders buying and selling shares in your company without the need of going public. Without this, without the step before going public and having that opportunity is a cost-effective option to manage those expectations.
Yeah.
And I think public markets, as you mentioned, are struggling or have struggled. It's very cyclical. I think they will return. But I think private capital is coming into companies, as everyone says. So I don't like to repeat it because obviously private companies are staying private for longer. And that is delaying the IPO process. I think institutions are obviously pulling money and putting it into very safe options, especially in the US and Asia, where they know they can guarantee returns, or at least hope they can guarantee some stable returns for investors. So I think there's a lot that needs to be done to incentivize and move capital back into public markets. But JP Jenkins serves as a perfect holding pattern. So lots of these companies that promise shareholders, we're going to IPO, 2 years ago, 3 years ago, 5 years ago, we're going to do a trade sale, an MBO, an exit, whatever it may be. Well, that's perfect. JP Jenkins can manage that expectation, provide a mechanism for liquidity. People can trade. It gets the pain points off of the CFO or the company secretary, and they can go about growing their business. So, yeah, I think public markets are, a very important element. We certainly don't want to replace them. We want to be the sort of step before that. And the reality is a lot of these companies don't even know whether they want to be public in the first place. So having options, having options is incredibly important. The reason why there's not many one of the reasons why there's not many very large companies in the UK like there are in the US, not only because obviously the expansive amount of capital, but also the fact that as entrepreneurs in the UK, we're quite quick to sell our companies. If they held on to that business and maybe just took a little bit of money out and the founder, paid themselves a little bit for their rewards and success, they could maintain and hold on to that IP until a larger exit. So I think what JP Jenkins does is it's not the silver bullet for capital markets and private markets, but it is a very good solution that provides a meaningful opportunity or exit or partial exit for all parties involved.
Yeah, and it's not binary, right? So if you go through a listing or an IPO, it becomes incredibly expensive, very regulated. On the other hand, you've got a situation where there's no liquidity, and you provide almost a bridge between the two As you say, holding pattern is probably too strong a word, but yeah, a lot of people, it's you don't know which direction you want to go, and somehow fast growing companies, IPO might be the solution, but it might not be. And it might take you 2 or 3 or 4 years, and sometimes it could also be that is it the right time to do an IPO? And I think you provide a wonderful solution for those kinds of companies, as well as for companies that have no intention of ever having an IPO, but they just want some liquidity and a mechanism to take some money off the table for the owners or the founders at a certain point. So I think that's fantastic. Yeah. So let's move a little bit on. So we've spoken about JP Jenkins. Everybody's heard, the UK PISCES initiative. It's not a star sign. So um, let's dive into that. It's been making headlines. So firstly, let's break down PISCES. What does it actually stand for? And for our audience, what does it actually do in simple terms?
So, and it's funny, I always get asked this, you can imagine, and the acronym itself, I always struggle or slow down with. And it's funny because they say, well, aren't you running a PISCES operation? I say, well, yeah, we are, but I didn't actually come up with the acronym myself. So PISCES is the private intermittent capitals and exchange system, which the HM Treasury and the FCA created. So essentially, it's a regulated framework for private markets. So what that essentially means is that in the UK, of course, we've had lots of regulation around public markets, and I think the focus for the FCA and HM Treasury is how do we regulate private markets, and we have a foothold and oversight over PISCES. But we manage and give a broad set of rules to the operators themselves. The two operators being ourselves, JP Jenkins, and the London Stock Exchange or LSEG Group. I can imagine that there may be other operators that come into this space over time. It's not that there's a limit to how many there can be. There could be several, there could be one, there could be five. I guess it really comes down to how much demand is there, how much liquidity is there, who's going to be using these platforms, what's the interest. So I guess it depends on all of those items of where we see it go. One thing to obviously be clear is it's a sandbox regulatory exercise by HMT and Treasury. So these things can change very. I mean, we've got a 5-year sandbox. The rules could change. The participants could change. What we mentioned now, Graham, may be very different in a year, 2 years, 3 years time. But what it is essentially an operation to regulate private markets. And it gives us an opportunity to say, well, look, we've got the green stamp from the regulator, we've got the green stamp from HM Treasury. There is an interest and need for this, and it also provides a clear guideline to companies that maybe didn't understand private markets before, what is required and what can be achieved. So there are 17 core disclosures of which companies need to abide by. Reality is, I think most of those companies that are in good state would probably be able to pass those 17 disclosures fairly easily. It also means that companies that want a intermittent, and obviously intermittent being a very important part of the PISCES framework.
Yeah, I want to drill down into that as a separate point, if you don't mind. Yeah.
Yeah, no, definitely. It's allowing different trading windows. So you don't have to have continuous trading, or you don't have the opportunity really to trade all day, every day, or week. It's monthly auctions, quarterly auctions, maybe even one liquidity event a year. And really, the focus here is that you have this PISCES model, and hopefully, obviously, I said it right at the start. The private intermittent securities and capital exchange system, and it's making sure that we follow a set of rules that. And I think the point at which they brought this around was to give investors and the buy side enough information as well. So I think when you look at private markets, and I said to you, Graham, maybe tomorrow I'll say, have you had a look at this company? It's a great business. Maybe bizval can help out. And you say, well, actually, there's not a huge amount of information publicly available on any of these private companies. I think the part about bringing this PISCES legal framework in is that we can create a really strong data room that gives enough transparency and information to the buy side and the investors actually participating in this market. Because previously, of years gone by, when you look at over-the-counter exchanges or grey markets or private markets the last 30, 50 years, it's very sort of hidden. There's not a lot of information. Um,
Mm.
it's quite ambiguous. It's caveat emptor. It's buyers beware. It's sort of good luck. And hopefully you know enough, right? So I
Yeah,
think this Pisces platform that we're creating alongside other operators, it definitely plays into the private equity, venture capital, EMI, employment option schemes focus more. And I think if companies want actually a traditional trading venue and a listing sort of feel, then you go towards our match bargain trading platform, our historic trading platform.
sure.
There are two entities essentially that JP Jenkins run, or two types of markets that JP Jenkins run, and it really depends on the criteria that the company or the client wants to how we would run it.
Absolutely. And I think a few points to touch on there. One, it is early days. So, you guys are, let's call it early adopters in supporting the platforms, probably the word, the initiative. And it is going to evolve and is going to develop. And I think the other thing is it's very principle based. So yes, there's a 17 rules, but it's not it's not the other end of the extreme where you've got 300 tick boxes that you need to do just to participate. And there's a recognition, I think, from the regulators that this is an important space and creating liquidity. So I think it creates, as you say, a sandbox, an environment where the participants are going to learn. And in time, I guess what it does is it creates confidence. So it creates transparency as opposed to all these things being tucked away and very, very opaque. And hopefully in time, it really does become a thriving part of the sort of middle and lower middle market liquidity creation. And I think that's the intention, right? So it's quite exciting to be part of building that as opposed to just plugging in into a mature ecosystem, right?
Definitely. I think, and that's why we were involved, and why we wanted to be involved as a company is that at the time, we were running, one of the largest, even though we're fairly embryonic in terms of the new team coming in over the last few years,
Yeah,
we were running the largest private market or, sort of match bargain trading facility in the UK, if
yeah,
not Europe. And we thought, well, whether or not the framework is incredibly successful, we hope it is, but we thought we need to be part of it because we'd love to shape the way private
mm,
markets move. And like you said, it could be, incredibly important, but I definitely would like to be realistic in the fact that I know it's not the silver bullet. I know it's not going to be the
mm.
resolution to obviously capital markets in general. Nor do I think it's going to really drive loads of companies to IPO. I think, that PICE exchange system works for options for clients and companies to think about when they've got large employment option schemes, EBTs, DOTs.
Yeah,
Like you said, if there's that example you use where there's two founders and one founder's 70 years old and wants out, and one founder's 40 and wants to stay in the business, perfect example to use PISCES. To
yeah,
provide a single secondary mechanism to get them out. You see in the US loads of secondary transactions, secondary sales, but they are single secondary sales. They're not a continuous secondary market.
yeah.
So it just depends on what that company's looking for, and hopefully it can be part of the Arsenal toolkit which companies can use and utilize.
Absolutely. I mean, the EIS is a really good example. Employment incentive schemes. It's all very well having shares on paper as an employee in a business, but if you don't have a way of actually cashing those out when you want to leave, it becomes nothing more than not even a golden handcuff. It becomes a, a golden noose in a way.
This goes back to probably the part of my career is when I first started in private markets. It was raising capital and tax efficient investment schemes, and a lot of the investors that were investing in EIS were aging, and unfortunately maybe sort of 60s, 70s, 80s plus, even older. And they were saying, well, this is great. We understand patient capital. We understand that we're investing in companies that could take 10, 5, 8, 12, 15 years to see a
Yeah,
return. But when you look at those schemes, they're amazing and fantastic, and I'm fully behind them, for supporting early stage entrepreneurs and growth in the UK and employment and everything else. But there is a huge amount of capital. And I think last time we looked at the ISA numbers, there's around
yeah,
52 million or 50 million plus. No, sorry, 30 billion plus over 52,000 companies that received EIS money, and very, very limited exits. And you look
mm,
at lots of the big VCP houses that have supported hundreds of companies. And now they're saying, well, actually, how do we recycle this capital? Where is the liquidity coming from? Even if it is at a discount, how can we get things moving. The cogs are slowly grinding,
Yeah.
and we really need to sort of, oil the mechanisms.
Yeah, I think it's a great segue into, I guess, the last section before we do the rapid fire questions is, yeah, as you know, we recently released the bizval Q1 UK M&A report as well as the US report, and one of the themes around that was mid-market dry powder and how there's a lot of money out there, but people are becoming more discerning around where they place that as opposed to looking for like a quick fix and a quick win. But in your perspective, Mason, how do you see the capital market evolving, and how do you see these kind of initiatives? How do you see it intersecting with M&A and valuations? What do you think the impact is going to be? I don't know how long is a piece of string, but if you could share with our listeners just some of your thoughts on that.
I think the role of public markets is ever so slightly changing. I mean, everyone's quite careful or worried or concerned about change. I know a lot of people in the traditional capital markets world don't like change too much, but I think given the introduction of newer and newer technology, and I don't I don't want to sound like some sort of people go crypto crazy and everything's going to be on the ledger and things like that. I'm very realistic in the fact that everything has its place. But I think the way in which people utilize the capital markets is slowly changing. I think that, private markets are booming, and I don't think that will slow down at any point in the next at least decade. The US secondary market space for the last 10, 15 years is huge. And you're seeing these huge secondaries in pre-IPO companies like Palantir and Spotify and Airbnb and whoever else it may be. I think that in the UK that will follow with both large secondary transactions, but also secondary markets on a smaller scale for small intermittent trading.
Yeah.
It's one of these things where I think everything has its place, but it will slowly be tweaked and changed depending on how AI, everything else moves, right? We have these buzzwords come into our market all the time. 1 minute it's ESG, then everyone gets told off for greenwashing, then it's AI, and then everyone gets told off that the valuations are too high because everyone's put an AI wording in their document. I think M&A and buy and build strategies are incredibly important, not only for our companies, but for the wider market. I think going on your point about what will happen to the M&A situation, I think M&A will play a massive part. There's lots of take privates going on. There's lots of acquisitions of UK companies. Listed UK companies are incredibly cheap right now, and there's an opportunity where you're seeing US buyers and overseas buyers picking them up all the time over the last 3-4 years. I don't think that will slow down unless markets resurge dramatically in the next couple of months or years. So I think M&A will play a big part, but also valuation work, right? So the relationship we have with bizval is incredibly important. Lots of the companies that list on JP Jenkins need to have a material third-party valuation. They need to work with advisors. They need to have registrars. They need to have their legal advisors look through, or lawyers look through the articles to make sure shares are freely transferable. So, there's an incredible part to play for every, cog here in the machine.
Yeah.
And I think, we'll all work to supporting capital markets, but I think it's all as long as everyone's moving in the right direction.
Yeah, I think it's evolving, and just to kind of like recap on that, I think all these things are giving alternatives or options to founders. It's no longer binary one way. What's it, bust or win the $1 million or go bust. I think these give optionality. It gives choices, and I think just to touch on something else, I think there is a search for. I wouldn't say cherry picking, but I think there's a return to sort of focus on quality assets as opposed to and quality earnings rather than growth at all costs. And I think platforms like that, at their core, have that as a focus. A business owner who engages with the JP Jenkins and PISCES platform, for instance, is thinking more broadly than just how do I grow as quickly as possible and luck out on a great IPO at the right time.
Classic story of Silicon Valley Bank, right? And
Yeah,
SoftBank and other entities where deployment of capital is the only thing, right, that they were worried about was
yeah,
deploying money everywhere and anywhere. But then the reality hits quite quickly, that now actually those companies aren't worth what they were, and the growth surge is not there, or the opportunity has slowed down, and the capex is incredibly high. And really, for us, it's about how do you manage those businesses, recycle the liquidity, and
Yeah.
actually focus on the real term.
And make sure that there aren't too many zombie companies lying around.
Exactly.
Mason, I think it's been a fascinating discussion. Hopefully our listeners have found this informative, and we'll give out your contact details and that in a while. But before we wrap up, we just have a bit of a fun section around some rapid fire questions. So, this is keeping you on the seat of your pants. So, you ready for this?
Yes. Yeah, let's go.
Okay. So we'll start with the easy one. What's the favorite part of your role?
It's a bit of a cop out me saying this, but it's you probably hear it from everyone. But working with entrepreneurs, as we said earlier, I worked with, and do you know what's interesting? When I was a child, I never thought that sat playing with um, toy, cars and trains and things, that I'd be working with the likes of companies like Hornby, and then when you're shopping as a teenager. And then 5, 10, 15 years later, I'm working with the management and the entrepreneur founder behind Superdry. And you're working with these brands, and that's what I love, is that the fact that you would have never imagined that you'd be working with all these companies where there's so many fascinating things going on. We had a great client and company called the Huck Group, and they demerged Ingenuity, and they joined us, and they're on a massive growth phase. And working with those companies from all shapes and sizes and jurisdictions is what's important to me. And I think if I didn't do that, I'd probably be slogging myself into work, just sat there sort of thinking, why am I not doing something else? So yeah, I think it gives me a purpose at least.
And then the people you meet, I mean, that absolutely. Okay. Your best book, and why would you recommend that? I mean, it could be a novel, it could be a business book, but what's your favorite book?
So the book I'm reading at the moment, which I mean, isn't probably what you're looking for in that answer, but the book I'm reading at the moment is Deal Hunter, which is a book that our chairman wrote on his story around finance and his history and his life, where he was actually one of the first investors in Crocodile Dundee. Funny enough,
Wow.
how he had lots of small wins throughout his life, and obviously some big wins as well. But the whole sort of narrative in that book is around being present, enjoying that moment, enjoying each small win and the journey of getting there. I think
Yeah.
I'm myself a victim of being quite impatient, and I want to get to the next goal. I want to achieve the next hurdle. I want to say, why is this company, or why have we as a company or marketplace not done this, and how do we help these companies? And people say, well, actually, it's all about enjoying the journey. And as you said,
Yeah.
what gets you up in the morning, what makes you work. I think looking back and seeing what you've achieved is incredibly important. And that's me. But if you were asking me another financial book or something I read that I quite enjoyed was Traders, Guns and Money. Was also an interesting but quite racy one in Asia.
I haven't read either of those, so they're definitely on my reading list for the plane over to London next in the next couple of weeks. Two more questions. So, what's one piece of advice you could give to an early stage founder thinking about their exit strategy? And I say early phase, somebody who's been in business for 2, 3, 4 years.
I think the advice would be to not focus too much. If you're looking at it from a public perspective, a public situation, then obviously you'd say let's not focus too much on the share price. The share price is can be quite volatile when you're in a public environment, but actually focusing on the growth, focusing on the business. People get so tied up with the next raise, the next, what's the next expansion, what's the next satellite, what's the next. Everyone gets like you were mentioning earlier, Graham, about everyone's worried about expanding and growing incredibly quickly. And my focus is focus on what's currently working. Keep it tight, keep it lean. Keep the cap table within the means of your control. If it grows and people are calling for liquidity and exits, it plays into having a marketplace. But it's certainly, utilizing the tools that are available to you and making sure that the expectations of an exit are managed. So as you mentioned, it used to be the promise of an IPO market, and an IPO would be the success. Whereas now I think there are multiple options in the market to manage those expectations.
I guess don't compare yourself to the celebrity influencers who
Yes.
become
Yes. Yeah.
if you're not a billionaire in 3 months sitting on a beach in Cayman, you've done something wrong, right?
Yeah, that's exactly it.
So you're going to look at your crystal ball for me. What is the one thing that you think is going to kind of the biggest impact on UK markets in the next 12 months?
I think there's a lot of heavy focus on PISCES, as you said. Conversations for at least 2 years on private markets in the UK and Europe.
Hmm.
I think that's going to be incredibly important part of the next trend for the next 12 months, next 2 years. I think revitalizing public markets in UK, but also other jurisdictions, and looking at what can we tweak in terms of the regulators, the infrastructure, the access to capital, I think is going to be incredibly important. I know the pension funds have been saying that they're going to actually try and do something to invigorate markets. I think those trends are going to be important. But the reality is, liquidity has been the main trend of every market since existence, right? And I think that will
Yeah.
always continue to be the biggest question. Buy side, who is buying these shares? How do we get liquidity? How do we improve market conditions? And I think that will be the biggest focus. But watch private markets. I think that's going to be the biggest conversation in the next 12 months. And secondary markets. Hopefully, JP Jenkins will be top of the tables.
I was going to say you're perfectly positioned to help facilitate and help everybody in that ecosystem. So we look on excitedly to see how that evolves. And Mason, I just want to say a massive thank you for joining us today. I think we've covered a bit about your background, about JP Jenkins, PISCES. It's been incredibly informative, and just understanding how platforms like JP Jenkins support it. So I appreciate your time. And any closing thoughts before we wrap up?
Maybe the fact that I didn't touch on, and this was one thing that came to as we were talking just now, is that private markets and JP Jenkins as a private exchange, really, or private market, it's not siloed in its use, right? So people think, well, actually, if we use JP Jenkins, it is or private market in any case, it is just for trading shares.
Yeah.
Lots of companies will use the platform for a whole host of different things, and it's so difficult to sort of say, well, this is the answer, right? Companies will use it to run buybacks. They'll use it to list subsidiaries to benchmark the valuation. They'll use it for a whole host of options. We even ran it where you'll have companies that run quarterly or semi-annual transactions. Because we used to get loads of family-owned businesses say, oh, we've got lots of shareholders, we're 100 years old plus, but we've been doing manual stock transfer forms. Please, can you help us before the CFO loses it, right? Or the company secretary, she's pulling her hair out because he's doing all these stock transfer. So it's so many use cases. It's incredibly malleable, and it's useful just to have a conversation in any case on any exit planning. Whether or not we can help is another matter.
Fantastic. And if everybody's curious finding about you, where can they get hold of you, Mason? How can they
So
get hold of JP
if you'd like to
Jenkins, and
see the
just share
whites,
that with our listeners?
yeah, of course. Thanks, Graham. So if you'd like to see the whites of my eyes, we're just next to Selfridges. So if anyone's in the UK and shopping, then please pop in, and our offices are there, and lovely to meet for a coffee. But yeah, my email is md, my initials, at jpjenkins.com, and happy to have a conversation or coffee or call with anyone.
Fantastic. Well, thanks everyone for joining us today. To everyone listening, also, if you want to check out something that Mason's written, check out the 2026 UK M&A report at bizvalglobal.com. And stay tuned to our bizval podcast, where we share insights on valuations, deal making, and just interesting stories with entrepreneurs and influencers in the space. So, Mason, good to see you. I'll be in London in a few weeks' time, and we'll be catching up over coffee and a meal. So, thanks for today, and
Thanks,
we'll chat
Graham.
soon.
See you soon.